Hello everyone. Today we are going to talk about interest rates and what you should know as a consumer about how they work, how you get them, and what do they all mean? What's it all mean? So here we go. One of the questions I used to get constantly when people would just call into the office would be, what is your rate? And this question, it's a good one, but it's also very, how do you say, it's a very hard one to answer without knowing anything about that person. And even if they just kind of give you a general overview of who they are and what they're looking to do, you're typically not going to be able to give them a very good answer. So it used to be a very frustrating thing for me because I'd have people call in and it didn't matter what I told them, they would usually never call back or I'd never get in contact with them again. They were just rate shopping, which was just kind of wasting their time and wasting my time, honestly. When it comes to getting an interest rates are really going to be dependent on, well, what the market is doing for the grand scheme of things, but also it's based on you. It's based on your specific situation, your scenario. So how do we get your specific situation, your scenario? We need to have a conversation. We need to do our pre-qualification. We need to go through a pre-approval even and get everything dialed in nice and tight so that when we go to price your specific situation, whether it's a purchase or a refinance, it's going to be priced specifically to you, your FICO score. How much equity do you have in your property? What do you think your property is worth? What's your debt to income ratios? How many borrowers are involved? Is it just you or is it you and somebody else? Is this a primary residence? Is this a second home? Is this an investment property? Is it a manufactured house? Is it a condo? These are all things that come in together when it comes to your interest rate. So having all of those things dialed in tight will actually give you an idea of what your interest rate could be. If you just walk into a bank and you said, what's your rate? It's not just like the bank has them sitting behind the counter and they say, well, here's the rate we have today. There it goes. It's always based on you. Even the banks that post it up on a wall, which I always thought was kind of silly. And then you ask yourself, well, what did I hear on the radio? What did I see on TV? How come I can't get that number? Those numbers are specific, very specific to that scenario that they put together, which is usually 800 FICO scores, 20 to 40% down, $400,000 loan, maybe it's a 10-year loan or something, but it's usually something very specific that very few people will actually qualify for. So it's whatever the best is that they think they can put together. Most people aren't going to get the best because it has to fit a very specific scenario. And it doesn't mean that you're not able to put something together well or that your situation isn't great. It's just a matter of how they put those together. So when you're going to go get your interest rate or you're talking about rates, it's really depending on you. So you need to go through the process of getting pre-approved to have an idea of what your rate could be. Because you don't lock an interest rate, and really listen to me here, this is important. You don't lock your interest rate until after you are in contract on your property. Because your interest rate, when you go to lock it, is going to be tied to a property address. Now you're not going to want to get your rate locked on a property you're not in escrow on. That doesn't make sense. What if your offer doesn't get accepted? So you got to remember that because you could go talk to your loan officer and then 2 months down the road, you go to buy a house. You go, boom, finally in. The rates have probably changed since then because they change several times a day. They don't shoot up and shoot down. It's not, it's not like some crazy new stock or a cryptocurrency or something where it's going to change a lot up and down. But they do change. They change with the market. So things will change. And I've had that conversation with people before saying, hey, when we talked, 90 days ago, the interest rates were different. I said, yes, they were. But you're buying now. There's not really much you can do about that. It's just whatever they are at that moment, whatever it is. So you ask yourself, well, how important is the rate? And honestly, you may think the rate is really, really important, but it's not nearly as important as who you're working with. You should be working with someone that you trust, someone who's been a straight shooter with you, that does what they say they're going to do and takes care of you. Their rate might be a little bit higher than the call center you could call into where you get passed off to 5 different people. It's the quality of experience. It might be a little higher. Honestly, even different branches of the same company might have different rate spreads. So here's the next thing. This is a big one too. There isn't just one rate that the company offers, and there isn't just one rate that the company offers you. It's actually a rate spread, okay? And quick, before we go any further, I want to keep this video nice and short, but also please like the video, subscribe to the channel if you haven't already, leave some comments below. If you have any questions, I'd love to cover more about this topic and try to help more people down the road. So take an extra second to do that, and I really appreciate it. It's a rate spread, okay? So what that means is that different investors, whoever you're pricing it with, the ones who are actually offering the money, they're going to have rates that are at the low end and at the higher end. And there's going to be a spread of what the cost is, as that cost usually gets close to zero and then goes back up to where they actually give you money. It's called a lender credit. They actually give you money for picking a higher rate. Sometimes that's a really cool tool to have if you don't have quite enough cash and you want to go close escrow. But let's say you're missing a couple $1,000s. You're like, well, I could pick a higher interest rate. I can afford the payment. We could do it now. Boom. If rates are in a relatively stable environment, maybe you can refinance down the road and get a lower one. But if you're just trying to get in the house and, I don't have quite enough and this is the one I want, that's a way of doing it. But the whole point is that it's a spread. And it's a spread where everything's broken down by eighths. So 2.125, 2.25, 2.375. They're very small. Now, if you're borrowing $400,000 and more, those eighths of a percent, they can make a difference in your payment. Your payment might go up or down $30, $40 a month based on that eighth of a percent. That's possible. If you're borrowing under like $300,000 or lower, your payment's not going to go up that much. Maybe $14, maybe $10. So it really comes down to the cost. Are you willing to spend money for the rate to buy it down? Well, how much does it cost? Are you going to recoup that cost in your savings? And if you do, how long will that take? If you're going to buy an interest rate down because you want that lowest rate you can get, and it costs you $6,000, but it's only saving you maybe $40 a month, it's going to be a long time before you realize those savings. It's another little pro tip there. I rarely suggest buying down the rate unless you're going to recoup that cost. You're going to get the savings in that within a relatively short amount of time. Anything beyond that, I really don't recommend going that far for it. Usually it's just whatever the rate is closest to zero, that's usually the one I'm going to go for. And like I said, it could be different. Different loan officers can have different arrangements with their lending companies where they have a different spread because it's based on how they might get paid as well. So it can be different even at the same company if you're talking to different people. So if you're to take anything away from this video, is that the interest rate, it's really not as important as you may think. There is no one size fits all. It's going to be specific, but it's more important that you're working with people that you think you can, that you believe you can trust, that you have some kind of reputation. They have some kind of reputation. You have some kind of relationship built up with them, because everyone's kind of getting their money from similar places. So they're not really going to be that different from each other. There'll be a little difference, but usually not a whole lot. You're not usually going to pay like a whole percent difference. It's not going to be that guy says 5% and this guy says 4%. It's going to be that guy says 3.75 and this guy says 3.825 or something like that. It's usually not a huge difference. But those are just some things to be thinking about when it comes to your interest rate. What's really important and how to get one and how they work. The more transparent the person is that you're speaking with through that process, I say that's the one that is more trustworthy, in my opinion. Some lenders, they'll say, okay, your rate is X. And it's based on nothing because they haven't looked at any of your stuff. They don't know anything about you. I don't trust that. I don't trust blanket stuff that's out there. Like, on the radio, here's what you get. Because very few people, if any, ever actually get that. They have to offer it. Doesn't mean anyone's going to get it. So anyway, just wanted to keep it short. I'm running along. Thank you for taking the time to watch this. If you liked the video, please like, comment, subscribe to the channel if you haven't already. I'll keep producing content and just want to get this information out there. Share it with somebody that you know is looking to buy a house or refinance, anything that could help them in that process and make it easier. Alrighty. Thank y'all. Talk to you later.